A lot of times it's easy to get caught up in the hyperbole, all the drama and the panic of something like what's happening right now. I'm not saying it's pleasant, but there is an opportunity. And I always just come back to there's always a reason to sell. And I guess my bottom line is don't. All right. So whether it's, right here, this is the COVID. Yeah, that's the COVID sell-off. So that's this little circle right here. And you can see that was the drop, okay? And then you look at where we are right now with the tariffs, and you might say, Rog, there's been a lot of big sell-offs. Like, what are people talking about? It's not as if crashes never happen. Oh, gosh, they do, and they happen a lot. Do we not remember what happened in 2022? Do we not remember what happened in Q2 of 2024? These types of 10 and 20% pullbacks are a natural part of market movement. So the more we realize it's a natural part of market movement, the more we realize if the natural drift of the S&P, of equities, is generally higher. So let's just limit this to the indices and not individual stocks. Or if you want to go a little bit more compartmentalized, maybe the high concentration weighted sectors, financials, technology, communications, semiconductors, healthcare, etc. We could kind of narrow it down to that, or even high concentration weighted stocks. But I like to stick with the indices for the purposes of this conversation. And here's the tariff war pullback. So please know, gang, this is not a game plan for now. This is a game plan for the rest of your trading career, because believe me, this won't be the only 10 and 20% pullback that you're going to deal with. This one is quick, though. I think the thing that caught a lot of traders by surprise, because, gang, panic is a surprise. No one knows this or has acted on it en masse, right? So please don't beat yourself up for saying, oh, I should have known. The fact that it did what it did from Wednesday forward means most traders, this includes the big money, right, which we think somehow has a crystal ball. They don't. They just have wealthier friends to bail them out. Okay. But when you look at this was everybody saying, whoops, we thought we had discounted what was the worst case scenario. And then we got the discussion in the Rose Garden and we realized we really underestimated what was going to happen, hence the sell-off. We're not out of the woods yet. There's a good chance the bottoming process has begun. And so what I wanted to do is show you what are the lessons from things like '08? What are the lessons from any one of the numerous quote-unquote crashes? And let's just normalize calling it a 20%. Let's not call it a crash. Does anyone here feel better by calling it a crash? I know I don't, right? I know I don't. And so the way I look at it is this. Once we've sold off 20%, I want to start to go shopping. And I want to put a list together of things that have pulled back at least 20%. At least. Doesn't mean I'm going to automatically buy it. So let's take a look at something like Apple. All right. So back in '08, like everybody else, I was freaking out. And mind you, I had already traded through Gulf One in my dorm room. I had traded through the implosion of long-term capital. I had traded through the tech bubble bursting. And even '08, to the most experienced traders I knew, and at that point I was pretty darn experienced, this was on a scale that we had never seen before. All right. So if you talk to people who traded through '08, they're probably not that freaked out. They're not happy, but they're probably not freaked out. Because like the old story goes, when all the clients of the broker call up and say, sell everything, and two clients call up and say, buy everything. And the broker says, well, why do you two want to buy when everyone else wants to sell? The answer is because we've seen this before, right? Because we've seen something like this before. I hadn't, not at the scale that we saw. So then I went to the drawing board and said, what do I need to do to coattail, right? To coattail the money. How do you find big money? There's only one way to do it. Through some sort of calculation of volume, right? So volume became the key. And there's two really popular tools for volume. One could be things like the point of control, and the other one could be a anchored or non-anchored volume weighted average price. I'm a fan of an anchored VWAP. So then I thought to myself, well, we were nowhere near the mean of the anchored VWAP, the VWAP itself. We were standard deviations below. So then I had to step back and ask myself, all right, based on what I knew about historical volume, let's talk about the weekly here for a moment, because when we're talking about major shock absorption, the weekly is a really good time frame to understand history and context. When we had a pretty big sell-off through 2022, we had another decent sell-off in October of 2022. We had more weakness in December of 2022. 2022, if y'all remember, that was pretty rough. Yeah? We bounced off the anchored VWAP, or very close to it, a number of times. We may not have touched it every time. You can see a lot of proximity. That's the blue line on the chart right here, the cyan color, or the white center line on my V-score tool. So what I wanted to do was sort out the standard deviations of an anchored volume weighted average price. And I'm never going to black box anyone. Look, I know some folks are going to, say, all right, Rog, I can use the anchored VWAP. I don't need the V-score. And that's true. You don't. But the problem is sometimes we'll stop at a first, second, third standard deviation. Sometimes the mean itself is not the decision, right? It could be below the mean. But this is a great example on Apple where the mean is definitely what I'm looking for. And we're closing in on it. And that's going to be approximately 148. All right. Another question I got a lot of, there was a question in the Sector Secrets Mastery about 3M. Let's do the same thing. All right. How do I coattail the money? Now, 3M is in a very different spot. It's not a mean reversion I'm looking for. In fact, if you look at where we've bottomed out a number of times, it's actually more around a 0.47, 0.50, 0.6 standard deviation. So the standard deviations don't have to go from first to second to third. Sometimes they'll go to a 0.5. And you can see 3M is really close, pretty much at that standard deviation. Okay, so I'm not really anticipating it going to the mean. If it does, that's fine. But it may stop right about where it is right now. It could very well be, finding some support around 121, 122. Right? So if I want to start looking at bargain hunting, the first question I'm going to ask myself is, have I at least pulled back 20%? Right? And that means I've got to get to about 125. Well, that's way up here. So at least the dinner bell is rung, right? And I know I can start looking for something to eat. Okay? And what I'm looking for is the 20%. And then now I'm going to look for levels. And in this case, that is potentially that reading of the standard deviation of the volume weighted average price. Okay? So this is how I shop. This is the mindset that I'm going to use. And, look, is there day trading opportunities? Of course there are day trading opportunities. And I'll get a little bit more into that in upcoming videos, but I would feel absolutely remiss if I did not bring up the fact that historical levels, and we could use something like the highest VIX readings that we've seen, right? Going from those full tilt VIX readings forward by 1, 2, 3, 4, 5 years, this is the data, gang. There's an opportunity to be had. I love data like this. I'm so grateful to people that put this kind of data together, because I'm looking at my chart already thinking, I know there's some opportunity here. And then I start looking at supportive data. Supportive data could even mean we're expecting 3 to 4 quarter point cuts for the remainder of this year. That's not necessarily going to save the market, but it's tough to be a longer term bear through the remainder of the year when we're really still wandering into accommodative monetary policy. We're not out of the woods yet, but this is the time to start building that shopping list. And here's an example of, again, what I did in 08, how I responded, and how I'm responding again in 2025. And eventually you too, if you're not already saying this, you're going to say, you're maybe hopefully nodding your head right now saying, yeah, Rog, I've seen this before, and I know what this opportunity can present going forward.
Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.